Welcome back to Upside Down Data. Let's talk about Bitcoin and where it is in the market cycle. So, the big narrative that have been driving Bitcoin up for this whole time has come to an end. The spot Bitcoin ETF has been launched, or multiple of them have been launched. And so, that's no longer a future looking narrative to drive the market. It's already happened. Now, the market will be looking for the next thing. That could be the halving, maybe that could be potential flows into the ETFs. Who knows? But the question is, will this be that sell the news event? We know that in the past, when we've gotten big bullish events like, for example, Coinbase's IPO or the futures Bitcoin ETF, what's followed often is major crashes. And I've seen a lot of people on YouTube and on X saying the same thing's going to happen again. We got the launch of those ETFs. Now we're going to have to go lower, lower. Some are even calling for new lows in this bear market following off of this. So what I want to do is look at the data and think about how realistic it is that we will get some kind of notable correction off of here, but more importantly, where we are in the market cycle. Are we really headed for these lower levels, or are we maybe due for something that's a little bit more mild? So let's go ahead and get into it. So on our site, partydigital.io, we recently added a bunch of new on-chain metrics, and we're going to be adding more in the coming days to weeks to months, so keep an eye on that. And one of the ones that we added is the percent of supply in profit. So that's what I'm showing you here for Bitcoin. So this is basically the percent of Bitcoin that's held that's in profit, that people are currently sitting at a profit. And what you can see is that it tends to follow pretty predictable patterns, that in bull markets, you'll get to these elevated levels, and sometimes you can sustain it for quite a while as you go up. And then in bear markets, you get to further and further loss, so less and less supply in profit. And so the same thing happened in this most recent cycle. We went all the way down to under 50% of supply in profit, similar level to what we've seen at the lows before for Bitcoin. And now we're rallying out of that. And so now we have gotten to a relatively elevated level, tagging 90% at the high here. Not too dissimilar from what we've seen from some other notable local tops in prior bull markets. And so when you look at this, it does seem like a pullback would be plausible here. You tend to see that in bull markets, that the first time you get up to those levels, up to about 90%, oftentimes that marks a take profit zone or area where you'll get some notable correction off of those levels before you can go back up. But then when you get into the more parabolic phase of the market, you can sustain those higher levels for longer. And so what not surprised me is if we see the similar thing again here. We tag 90 like we have in past bull markets that first time around. Maybe we have to have some kind of a correction that could be relatively short-lived, like for example, what we saw in 2016, 2015, or maybe a bit longer like we saw here in 2019, but something in that ballpark. Let things reset and then be able to move back to the upside. And one of the reasons that's useful to watch something like this is to also watch it in combination with something like market sentiment. And the reason that market sentiment is so important to watch, I've talked about this before in the past, where sometimes people think that if the majority of people think something that it can't happen. It's a little bit more complicated than that. Really, in my view, what it is when the majority of people get too extreme about something, that's when you have to get concerned. And I think one of the things that we've seen with this hype around the ETF narrative is that basically everyone had fallen into the camp, or most people have fallen into the camp that we're in a bull market, and that B, we're going to go a lot higher. And basically, there are a lot of people thinking that we just keep going up, up, up to new all-time highs from here. One of the issues that can arise when that happens is it's less about what people say. That's not really what's important. It's what people are actually doing. And the reason why extreme sentiment can be useful is that it's probably more indicative of what people are actually doing. So if you see a lot of people thinking and really being vocal about there being new all-time highs coming imminently, then it means that they're probably exposing themselves to the market about as much as they want to. They've bought as much as they're going to buy. And the issue when that happens is when everyone who's going to buy has bought as much as they're going to buy, where's the new demand going to come from to push prices higher to those levels? Well, where is it going to come from? If everyone who is going to buy have already bought, there's no new demand. And so what can happen then is that there's no new demand to push price up further. Price stalls, it starts moving down, and then the only people who are left to buy are trying to get a good deal. But as price moves down, they might start thinking, well, wait a minute, this isn't a good deal anymore. Price is collapsing. I'm going to keep moving my bids lower and lower and lower. And that's where you can see off of those sentiment extremes, these kind of drawdowns that can last for a while, as you're having to finally get down to a point where the market actually steps in and has some more organic demand. And then finally, that can lead to new demand showing up for things to go up. And then what can also happen is as you're kind of moving down, some of the people who were FOMOing in up at the top are saying, oh crap, this is what I signed up for. I thought I was going to all-time highs. They dump, add to the selling pressure. And you kind of have to reset things, let sentiment and positioning change, and then you can get to a point where demand can actually step in and start overweighing that supply to move things back up. So there's no guarantee that that has to happen, but it wouldn't surprise me if with this setup that could happen, where we have the vast majority of people in profit, price starting to look a little bit weak. And if it continues, if we lose support here in the low 40Ks, move back into the 30Ks, you could imagine that a lot of people might decide, well, I better take profit now while I still can. Things might move down. We might have to find a lower base to find that demand to step back in. And that could then set us up. And so it wouldn't surprise me if those type of dynamics could happen. We might need to see a bit more fear in the market, people less confident that we're just going to go ripping to new all-time highs, so that we kind of shake out those hands who are just going to be selling and kind of getting up because they FOMO'd in at the top. And then a lot of people get back in at what they think is actually a fair value for Bitcoin right now to set the stage for that next leg up. Really getting back down to levels, for example, back down around here, like we've seen in the past happen, reset, and then move back up. So obviously nothing's guaranteed, and that's not financial advice, but those are the type of dynamics that could start to take hold. And we have so many people in profits that they might get a little bit skittish if they see price moving against them, want to lock in that profit, maybe think that lower prices will come and they can reload at those lower levels. We can also see how this dovetails with our risk model, our upside downside potential indicator, or UDPI. So we saw that we also got pretty extended here on the long-term UDPI going into this leg up here. So this is the long-term version, cares about moves that play out over months to multiple months, so a little bit more patient in its time horizon. And so it has been cooling off, but we're not back down to these low levels that we tend to see catalyze these big moves into the parabolic phases of bull markets. And again, this is assuming we're not in that parabolic phase. I don't think we are. Certainly price action doesn't seem to be currently behaving like it often does in the absolute parabolic phase of a market cycle. Think something like this. So what I might be looking for is for the long-term DPI to move lower, to get back into these a little bit deeper negatives, to indicate that value zone where maybe new demand wants to step in and start accumulating more aggressively again. No guarantee we have to get down there. You know, it's if we're at somewhere like this, then we wouldn't have to, but I just don't think we're at that phase yet. This is really the full mania phase of a bull market that we see this kind of behavior here, for example, in 2017. I don't think we're there yet. I think it'd be more likely we might have to reset into these deeper levels, like, for example, something over here, for example, or maybe even as more extreme here in 2019, to set the stage for that next move up. So no guarantees, but that's one of the things that I'm looking out for. And we can also see this if we look at our momentum bias indicator, or MBI. So this is a model I really like to look at to see where are we in the market cycle. And one of the things that's nice about the MBI is that it gives you a lot of information. So basically, it's looking at what is the prevailing momentum in the market. Is it prevailing to the upside or to the downside? And so what you'll see is that in bull markets, you get this very textbook behavior. You spend a lot of time in the green, only very briefly dip into the red, but then you transition to the bear market, which is the exact opposite. Mostly red, just a little bit of blips of green before you find the bottom. And then you go into what I think is maybe the most interesting phase, or most relevant to where we are right now, this oscillation around zero. And the reason this is important is that the way the MBI works is it's a Z-score. So 0 is the average momentum that's in the market. So for Bitcoin, that's positive because it's gone up massively over time. And then a standard deviation units above and below is what this is indicating. And so when you're oscillating around 0, what that means is that you're generally tracking the average positive momentum that Bitcoin has had. And that's a good sign. That's why you'll see price often move up in those phases where you're oscillating around 0, because it's tracking that average momentum. But it also means that momentum is not getting too extreme. It's not getting so overextended that it often will lead to those blow off tops. That's what you'll see when momentum gets way too extreme to the upside. That tends to mark these blow off top type points where price will then roll over and crash. And so you like to track this for a while to really kind of coil the spring, build up to then eventually launch into this more parabolic phase of the bull market. Now, I talked in a video a few months ago, or rather a few weeks ago, about how I expected that with this move up here, us to come back and have to dip back below 0 again, that we were probably still in this oscillation phase and to watch for that to show up. And it seems like it's indeed what is about to happen. We're just slightly above 0 now in the MBI. We'll probably dip back below into the red and then just if we're in a bull market, which it seems like we are, just do what we've done before. We'll dip to the red. Maybe people will get scared. That's when we'll kind of get that reset on sentiment I was talking about. Maybe price will move down enough that we'll reset how many people are in profit, especially if people start selling, then that will also change who all is in profit. Really reset things for that next upswing that could be the next leg up in the bull market. And it might take different amounts of time for that to happen. What we've seen in the past, that can take months for that to play out before you get that next big leg up. But it's part of a healthy market dynamic. You won't just go up only forever. And honestly, if we did just go up only, we probably wouldn't get nearly as high as if we just continue to slowly grind up, think something like this, to eventually then build into the parabolic phase. Going up too fast, too quickly is often not a good thing. And so these are all normal dynamics. And that's really what I wanted to talk about in this video. That it's probably premature to think that we're just going to crash to way lower levels yet necessarily. We'll still have to see. There's still invalidation. But I think if we break support here in the low 40Ks, that is quite likely. And I'd be looking in the low to medium 30Ks as being that next possible support level. But if that happened, a lot of people will get terrified. You'll see a lot more people on YouTube and X saying that, all right, this is it. Off we go down to new lows. Look, we just had that spot ETF launch. Big hyper, things like that for Bitcoin. Big bullish events tend not to actually be bullish. We're going lower and lower and lower. But that might just be part of a healthy reset in the market to then shake out a lot of that leverage, shake out a lot of that unrealistic bullishness, and then set the stage for that next leg up further. And so if we see that, it would be fully expected in my opinion. And then what we have to do is evaluate the data at that time to say, all right, does it still look like we're in a healthy bull market, or has anything changed that might make us scared and think that we're actually changing? But for right now, I don't think that anything in the data is pointing to that necessarily needing to happen. I think this is much more like an early bull market, and that would probably, for me, look more like a normal correction rather than some really terrifying event. So not financial advice, just make your own opinion, but that's what I'm thinking about right now. All right, so if you like the content, remember to subscribe to the channel, give the video a like, and follow us on X. A lot of updates for our models and more over there. And you can go to our website, PolarityDigital.io, to see live data from our models and more.